Hey guys, welcome back to my channel. This is Matrixfx here. So today we'll be doing the review on GBPUSD. Now if you watch my weekly review videos, you will have an idea of some of the things I'm going to say, because I said one or two about those things in the weekly review video for this week. So without wasting much of your time, guys, I think let's just hop into it. I'm really tired. I think I just want to shoot this video as quick as possible and go and get some sleep, go and get some rest, because this week have been really hectic for me. So if you're enjoying the video so far, please do well to like and subscribe to the channel so that you'll be getting more content, and make sure you on the notification button to be getting more content from this channel, and also to be, like, should I say, up to date. Let me say it that way, up to date. So let's go into it, guys. Now we're going to do the same thing that we've been doing since like the beginning of this channel. That is the way I used to get my bias. Those of you who haven't noticed it, this is how. Now you can see this level to this level, used it to get my premium to discount. But that was like when we were down here. That's when this was really effective. But let's just move on, guys. Now in the weekly, I think this is the week we are in before this week. So you already know that this other block right here is our objective. Now on the daily, I think this was like the open of that day. And this, remember the other block, this was like our objective. So this was the objective in the beginning of the week, but you know that before the market trades to this level, it will trade to this level, to trade to this level. So you can just mark that out in your chart. I think I have my eyes set on them already. So let's go. Now in the daily, you can see that there's a fair value gap. This week is just manipulation for me. I don't value this week. I like seeing candle for candle, that kind of thing. So what we have to 1 hour charts. Now in our 1 hour chart, remember open, close, the opening line. Now for those of you who don't understand weekly profile, I think I forgot to mention this in all my other videos when I was breaking down, or should I say explaining the week for you guys. For those of you who haven't understand the weekly profile, please, there is a link in the description of all the video to that video, because that video is very, very, very important for you guys. There is a lot of knowledge in that video. You guys sincerely, if you watch that video and you don't enjoy it, and you feel you didn't learn anything in that video, come back and tell me, because I believe there is no way you come back and you say you did not learn maybe 1 or 2 things in that video. So let's continue. Now in our 1 hour charts, this other block, you've seen it. That's why I do go to the 1 hour. For those of you asking, say, you're not doing anything in the 1 hour, why are you now going to the 1 hour? There are certain levels. If I don't see anything in the 1 hour, then I just continue, go to my 15 minutes. But in this case, I saw the other block. So in the 15 minutes, you can see what the market was doing for our SMC traders. You already know the levels. Simple as this. What's wrong with that too? Another block, sell it to that level and stuff like that. But for us that are using this concept, I don't think we'll be catching all this kind of move. For me, it's too risky. The market is too close to the objective, which is like, for the meantime, that it is to be like, it will be that objective. We'll be expecting the market to go from the open, this low, then maybe if it will form another low, we don't know then, before continue higher. And it's like just a graphic depletion, guys. So we want to do trades that the average Joe can catch. So that's what we need, the one that the average Joe will be able to catch. it's not as if I'm saying anything. So for those of us bearing Joe who are watching my channel, I'm not really spoiling your name or anything of that nature, but I'm just trying to make something here, at least throw some light into the video. Let the video not be that dull. So let's continue, guys. Now, okay, we'll come to the chart and we'll see this. Oh, the market didn't suit that. That's really disappointing. That's really disappointing, guys. So, okay, left the market, it broke structure. We now go to the 15 minutes to show you how fractal price can be. You now see what the price did there. Broke structure, this is another block. You'll be waiting for that other block. That's it. If you want to catch the counter move, be waiting for that other block. Go back to the 5 minutes. Let's be really quick with this video. Clearly see what the market did. Came back. You'd have noticed that this is a fair value gap just before the other block. And you know that we are trading fair value gaps here. We are not focusing much on other blocks. So even though the other block, this is now the 5 minutes other block open, the market tapped into it. The market tapped into it and sold short. Now if you didn't catch that move, let's say you want to use our entry technique, and you know that in our entry technique you are entering off of another block and you don't want to enter straight off of this one. The market give you another opportunity to enter, but like I said, for me I won't take this. It's too close to the the level. The market can quickly reverse. But if you did 1:3 after the market got to that level during the New York session, what we will be looking at, we that wait for price and do trade the buyers, will be looking and will observe this. There is nobody saying trading against the buyers is bad. I do trade against the buyers sometimes because your buyers might not be correct, so you have to take note of that. So you can see the market swept liquidity, broke structure. If you feel that level, this is like what we have been doing since the beginning of this review. So feel that level, you'll be like, okay, go down to the lower time frame, one lower than the 5, to see if we have a fair value gap below the 50%. You can see we do have a fair value gap, but it's not really clear. 1 minute it is. I don't like going to the 1 minute. To be sincere with you guys, I sincerely don't like going to the 1 minute. I like seeing my entry very clear. I like seeing my entry very clear in the 5 minutes. But obviously, in this situation, you'd have to go to the 1 minute, and lo and behold, isn't this magic? Is that not a fair value gap right there? You've seen it. So like I said, everything respects the 5 minutes. Keeping our stop loss here just to be safe. An 11 pip stop loss. Oh, that's not bad. 1:3. 1:3 RR. The market traded to it even before. Okay, market traded to it the next day, Asian session. But for me, you know that you guys would have known that I would have closed at the closed, so I would have gotten the 1:66. So that's not a bad thing. Also, that's not bad. I think that's like, okay, the idea is to make money, guys. That's the idea of trading, is to make money. That's our primary goal, to make money. So that's the idea, making money. Now the next day, you know that we are below the weekly open. Now the Asia didn't do much. Asia didn't really do much. Asia of that day didn't really do much. What it did was that it left us with this fair value gap. Already when you come in the morning, you already observe this fair value gap, and then the market came to fill it. Immediately the market filled that fair value gap, which is now our liquidity pool in this situation. You ask yourself, okay, which structure give birth to that move is this leg right here, and Scott's field right here. So this is was where the market broke structure. You can see it is not clear. If you go down to the lower time frame, I'm very sure you see your entry here for you to ride it higher. But I'm tired, guys. Sincerely, I'm tired. I won't be going. Oh, you know what? Let's just do it. You can see the effort I'm putting into the video, guys. Please subscribe and leave a like in this video. And guys, make sure you check out the weekly profile, because I feel like it will aid us in this channel. You know, it will really help us. Nobody has to tell you guys that this is below 50%. That's definitely below 50. You already have to know by now. I don't need to start drawing up the fib, but just to fulfill all righteousness, you can see it below 50%. Just to fulfill all righteousness. Let's see. So you took the trade here. Now, one thing you guys have to be cautious of is that if you notice, the fair value gap has already been filled. So it is like up to you. Genuinely, if I was to trade this, you know that I'm trading with the buyers. It's supposed to be 1% risk. I won't risk 1% again, because of the trade has already, the fair value gap has already been filled. But that doesn't mean that there's no reaction in that fair value gap. So obviously you can see that after trading higher, tapped into the former fair value gap also for moving higher. So there's still reaction there. I think I will do a video soon of my backlog, so that you guys will know why I do certain things. I'll do a video of my backlog, like a video where I'll, put it like a spreadsheet, with everything, all my back tests and every possible scenario, when it went well, when it didn't, when it gave me broke even and everything. So you can see this is like a 1:3. This is our standard 1:3 right here. And you have seen the market quickly hit our TP. So for those of you who leave your TP open and you caught this move, lucky you. Now in the New York session, guess what the market did in the New York session? The market gave us another opportunity, clearing all this liquidity right here. Cleared it right there. Now let's just go back to the 5 minutes, because if we are to look at the market from the 3 minutes, you just be seeing setup after setup after setup after setup. So after the market cleared this, the failed technique, it is now a new structure. When it broke, we have to fill this level right here. You have to fill this level right here. Now this is the fill technique. For those of you who don't know what the fill technique is, please go back and watch the simplified series. I think it's like episode 4, so I can't really remember the episode I taught that fill technique. So remember, you're trading with the buyers. Wow, 20 pips stop loss. Guys, I've done 20 pips stop loss so many times, so please don't come and be thinking 20 pips stop loss is that much of like a big deal. It's not that much. Like I said, the idea is to make money, provided you are going, like, your trade is hitting TP. You have no issue whether you use 100 pips stop loss and you get your 1:3, and the trade gets to 300 pips and it hits your take profits. You are profitable. Is that you are profitable? So that's it. So you can see that obviously it hits TP the next day, but you'd have seen what you endure. I think the drawdown is very minimal. It's not as I even imagined. So you can see the market did this, came back right here, just a little drawdown before moving up, then coming back, then hitting your TP. So for you to be able to take this trade, it will be very obvious that you're able to hold it to this level, get your 1:7, and if you did hold it to that level, if possible, held it to this level, wow, isn't that beautiful? Even with a 21 pip stop loss, you can still do a 1:12. So imagine tightening the stop loss 1:44, 1:2, depending on how good you are, guys. If you backlog and you see that there's a way you can reduce your stop loss even in this kind of situation, lucky you. Please be free to even, you know, leave a comment and tell me that okay, I've backlogged and seen a way to reduce the stop loss in this situation. I am always free and open to learn something new. That's trading for you. You should be open-minded to learn something from anybody, provided what the person is talking about makes sense. So when there's no sense in what the person is saying, that's when you have to run. So the next day, market took out the high, sweep liquidity, came back, broke structure. I know what I'm saying, guys. I know what I'm saying. You'd have taken a loss here, obviously, because you might be saying, okay, let's see if we can ride it to maybe this level or stuff like that, 1:3, and you'd have taken a loss. But if you didn't, if you were able to see the market for what it is, after this came back, sweep this, and guess what we did? We broke structure right here. We broke this structure, and if you flip that, okay, you have seen that you have not caught this trade, and this was the Wednesday, the FOMC day. So naturally, all I can see for this particular day is ICT advises not to trade on news days, but sincerely, to be sincere with you guys, I do. It's not as if I feel as if I'm too big. It's just that even when I was trading SMC, I wasn't really that concerned about news. I have this belief that if it will go my way, if I'm on the right side of the market, I'm on the right side of the market. The only problem with trading news is brokers will deal with you. So let's see. The next day after the news, you can see what the market did. Came back, swept this level right here. This level, the market swept it. After sweeping that level, we broke structure, but we didn't break this. The field technique, before we broke the second structure, we take our fib, get that a fair value gap just there, and another block, enter off of the other block, target that fair value gap there, get your 1:7. You can even take something out at 1:3. As I've seen that way very quick. So I think that trade is very clear. Let's assume you didn't take the one in the London session. During the New York session, you can see the market reaches back into this fair value gap that it has already swept liquidity with. This is very important. The leg that you're entering off of must have swept liquidity. So let me quickly do this. You can see swept liquidity right here before breaking structure right here, then came back and he tapped that before we went into this consolidation at the end of the day. So that's all for this video, guys. Thank you for watching. Please do like and subscribe, and I will talk to you guys later.